Hey there, everyone. Happy Tuesday. The market has us on the edge of our seats as I'm looking at the technicals on the charts, and I'm going to share with you what exactly I'm seeing. I shared these over at the Discord yesterday, and if you guys want to see these as I put them out over at the Discord, you guys can join me and the other panel experts over there. We have a joint Discord all put together, all in one place, thousands of members, positive community. We got stocks, we got crypto, options, you name it, all over there. We got AI tools over there. We got the bread bot over there, advanced charting tools as well. The products, services are seemingly endless. And you guys can also see our trades as well, our buys, our sells, you name it. It's there. It's ready to go for you. It's waiting. Down in the description, find that link for the Discord. In the meantime, we're going to take a look at QQQ, SPY, IWM. Also, Bitcoin has us biting our nails as well, and XRP trying to follow suit. And like I said, I'll show you exactly what I mean in the charts. And it might seem simplistic, but honestly, I think it is the key thing that we're watching for from a technical indicator standpoint for, well, exactly what we're seeing in these charts. So I'll share with you what I'm seeing. Let's get right into it. So popping it up here, this is QQQ. And I had said yesterday in my video that it's all about the 20-day. And then look where we opened. We opened pretty much at the 20-day and got rejection. That rejection is important because, well, we need to get up above it. And where we closed up above the previous day, that's a good thing to see us closing up above that previous close that we have, but we still got to get back up on top the 20-day. The RSI right now just below 50. We got to see that momentum cross up over 50, and it's been a very trying time to see that happen off of this oversold territory that we were at. We're looking for that really good news, I'll say this, for hopefully some movement out of the whole U.S.-China trade war, that there's some sort of capitulation from one or both sides. Well, hopefully either from the Chinese side for the U.S. markets or from both sides to come to a compromise or agree to suspend the substantial tariffs until some sort of further agreement can be reached. That, hey, we're going to talk about this. This is silly what we're doing right now. Let's go ahead and get this worked out. Absolutely love to hear it. In the meantime, got to get up over that 20-day. And so you guys can see the critical support that I was talking about. That's exactly where we turned around, especially because of that suspension that we had for the 90-day suspension for tariffs for like 75 or so countries. So just to bring up the EMAs for a moment, because I'm going to be talking about those in the other charts as well. So the exponential moving averages that I have here, the 5, the 13, and the 50, they're going to show more near-term price action, and they're going to be weighted toward the near term. We're up above the 5, and so that is a bullish thing to see us up above it. We're also above the 13. If we can get the 5 to cross over the 13, or more generally, if we can get the faster moving averages to cross up over the slower moving averages, that's a bullish thing to watch for. We need the momentum to help us out. That'd be a good sign. Right now, momentum's not helping. SMA is not helping. The 5 crossing the 13 would absolutely help us out. The fact that we're up above this yellow 13 period is great for us. Getting up above that 50 next would be great as well. So the 200, by the way, is all the way up here at about 492. Right now, the trend is currently bearish by the momentum standards, by the moving average standards, and we would like to see that flip back around. Hopefully, we get progress sooner than later, and also we need an excellent economic data to help us out. If you haven't seen my videos on the 4 pillars of what props up markets, you should absolutely check that out. So GDP, inflation, monetary policy, and then labor market participation are ones that we want to pay attention to. I don't have time in this video to go through those details, but absolutely every one of those is currently in question right now. So we have the market down to this sort of doubtful area, if you will, while things get sorted out with the tariffs, with inflation, with monetary policy, with GDP, and of course, the labor market, which is at the tail end of that, which will have that kind of that whipping effect, if you will, should we see that weakness come to the labor market. So moving over to SPY. So just with the simple moving averages real quick, we did not get up to the 20-day. We are sitting on top of the 13-day EMA though. So to bring up the EMAs for you to see the more near-term price action for this. Let me take down the SMAs. There we go. So we can see just a little bit. And like I said, I put these out yesterday and they're still holding true today. I circled this candle because we are sitting, at the time we were sitting right on top of the 13. We did close just a little bit above it. The pre-market has us right about at that 13 period EMA. It's good to sit on top of the moving averages. That's a bullish thing. Here you can see us dangling off the 5 period. So bearish. We tried to get up above it, didn't quite ride up on top of it. So that's kind of a questionable area, if you will. And then we started getting there, but we had other technical indicators besides the moving averages, such as the RSI being a little bit weak. The fact that we were down below the 50 and the 200, causing any sort of annoyance at least for trying to get back to the upside. We're trying to keep those bulls on their bull run, if you will. Right now, the bears have taken charge, but I think the bulls still have that fighting chance, and that's what we're looking for. So just to put up the SMAs for a moment, the simple moving averages that just take up the last 20, 50, or 200 days, add up all those closing prices together. That's what I have it set to anyway. You can do like midpoint prices from open and close and everything like that, but I have it set to closing prices. Adds them all up and divides by 20, 50, or 200, depending on which one you're looking at. We have the 50 down over the 200. That's a bearish signal. The fact that we're down trading below the 50, the 200, the 20, those are all bearish things. The fact the RSI is below 50, currently bearish. So that's why I say it's really important that we get the RSI back up over 50 on the daily chart, and we start taking on the 20, and that we start trading above the 20, because the reversion to the mean would be back up on top of that moving average instead of dangling off the bottom of it, like I just previously talked about. So if we move over to IWM, sitting on top of the 5 EMA, as I had it posted yesterday. So real quick, before I take down the simple moving averages that you see on here, let me take down those trend lines. Down below 200, well down below the 50 and the 20. Definitely not even near that 20 period SMA. You can see the last time that we tried it out, just couldn't hold it, sold off anyway. And IWM is probably going to react a little bit more substantially to those pillars that I talked about for propping up markets, that when those pillars start to lose their sheen, they start to be suspected of cracking, that there could be something structural that's affecting them. That's where IWM is going to suffer, because it tracks the Russell 2000 stocks. Those are small caps, and they're not going to be as well insulated to high inflation or to recession. So and also, I should say that they actually really, really need that easy monetary policy even more than what we'd have for the NASDAQ 100 or the S&P 500. So let me put up the EMAs for you right now. There we go. We'll take down the simple moving averages, and you can see we don't have the same advantage here that we had with the QQQ with SPY, that we were just dangling right off the moving average, this 5 period, which is in green here. So bearish for us, made it up above it. We were sitting on it. Now we're trading just up above it a little bit. We closed above it yesterday. We're not up on top of the 13. That would be the next bullish sign that we're looking for the Russell 2000 stocks. And we do always want to combine that with what's going on in the bigger sense of things. So it could be macroeconomically, it could be across the broader market. It could also be geopolitically. What exactly are we looking for? So I think the trade war is a huge part of it with China right now, that if we can make the whole tariff mess either go away or substantially subside from where it's at right now, that could really help out these small cap stocks as well as the overall market. So over to Bitcoin. A few more technicals on here. We're in a descending wedge pattern, just popping out the top of it. We actually found out we retested support on Saturday, April the 25th. Got to get up above this red EMA that you see on here. This is the 50 period exponential moving average. We have 1, 2, 3, 4 rejections so far. You can see the 5 has crossed the 13. Let me zoom in so you can really see that. So this is a bullish sign to see us trading up above this green 5. The fact the green 5 is up above the yellow 13. Bullish, the RSI above 50, bullish. We're putting pressure up on that 50. If we can pop and overtake the 50, we can have that big move coming for Bitcoin, taking us up at least to about 90,000 or so. Let me bring the technicals back for a moment, just so we can talk about a little bit of what we're seeing. We have some fairly decent resistance from 89.6 up to about 92,000. And then this white trend line that you see across here is actually one of the rays that I had talked about. If I actually go to the monthly chart, you can see them a little bit better. I highlighted the two that were currently in between, but you can see this this fan type shape that we have happening, the diagonal line slanting across your screen. As a matter of fact, I think I can briefly take down these Fibonacci extensions for you. There we go. Now you can see those rays a little bit more, and I highlighted the two that were currently between. They act as support and resistance for us repeatedly, time and time again. Bitcoin tends to follow those until they get broken, and then they just look for the next one. All of these, by the way, were drawn up from 2013 up to 2021, with the exception of the very top one that we hit at the most recent peaks. That's the first time that a new ray's been drawn since 2021. So it took about 3 to 4 years in order to make that happen. So for Bitcoin, just to drop down back to the daily chart for a moment here, what are we looking for? We got to get on top of that 50 to see that further bullishness, and then that should give us clearance up until this top ray that we have here. But there are some other things that we have to pay attention to. Like I said, about 89.6 up to about 92,000. If we get up above that ray, we still have a few more to clear. You can see all the chop that we had before. That happens about the mid 90s. it's getting up above that 100,000 mark that actually gives us about another 13% room. So we have a bit of mess to get through during that time for Bitcoin, but if we get the volume going enough, the momentum's looking right. If we go to weekly, just to look at the momentum for a quick moment, we're at 50.14, could be turning things around on a weekly basis. On a monthly basis, we're back out of overbought territory, back into just bullish territory. So we could have the timing right. I will say that if we do lose this ray that's coming across here on your chart on the monthly screen, the next one here sets up that next major opportunity as it starts to hit these other peaks that we had previously. And so the farther we drop down, the bigger the opportunity, in my opinion, for Bitcoin. I think that it only further opens the floodgates for adoption for Bitcoin if it sells off, if the rest of the market has weakness, if we really go risk off, if things go really sideways, Bitcoin's going to have an even brighter time in the sun, because I still think it's going to go much higher than it currently has peaked out already to about 109,000. So XRP, just to close things up, talking about the EMAs here, because I do think these moving averages, we're above 5 and 13, the momentum just above 50. We need that volume confirmation. Volume would be a great thing to confirm the next big move across all of these ETFs that I have up here, or across Bitcoin or XRP, you name it. That 50, we got a solid rejection off the 50 EMA, a nice volume supported move up above it. Could be all that movement that it takes for XRP to push us up, and we'd really start to exit the area of chop right around that 250 to 260 mark. Once we get up above that, we have far less difficulty with XRP pushing to the upside. And like I said, that next big volume push, that next big momentum move that we got from back here, that next leg up could be happening for us sometime in the near future. Now, mind you, these are all possibilities. These are all potentials that we have. There's no guarantees with anything that we see here, but I do think that there's reasons to be hopeful that, well, maybe we do navigate this. If there is another leg down, I think that second leg down could show us where that true bottom is for the markets if we haven't seen it already. So leg down again. If that does happen, I think that next opportunity happens. Maybe we either double bottom for like NASDAQ 100 for what we see for IWM or SPY. And if we do see that double bottom, that could set up the first opportunity. The second one will be that we go even lower. We hit the 38.2. If you haven't seen my old videos talking about that Fibonacci retracement level from October 2002 until most recent peak, you should watch that one, because it really it called this previous bottom that we had. And so if we do drop down again, we break the 23.6, then we're looking at the 38.2, and that could be substantially lower than what we've currently seen. But like I said, I think that sets up, the lower we go, the bigger the move back to the upside. I think overall, each one of the markets that I've covered here has a higher high than what we've seen, setting up a hugely de-risked play should we leg down. In the meantime, if we do pop up from here, if we do see some relaxing of monetary policy, if we also see further good news for what we see from GDP, if we see some trade tensions relax between the US and China, these could be all things that could be the next leg up for the markets. And so it's what I'm watching for, generally speaking, from where we're at right now. But I am prepared to move either way. And if you guys want to see those trades that I have, if you want to see more of my analyses, like I told you earlier, down in the description, you'll find that link for the Discord. You'll find me and the other panel experts over there covering stocks, cryptos, bonds, broad market, you name it. We cover it. We talk about it. So like I said, guys, down in the description, make sure you choose the earner tier. You get access to all the products and services that we have to offer. And then also, if you want to learn to do technical analysis yourself, if you want to learn how to trade using technos or the bread recipe like I use, that involves the EMAs and a few more things, you guys can learn that, and also about trading options using the coursework down in the description through Stockmo Academy. So click on that link, sign up, use the code word DOCTOR to save a ton of cash. And if you bundle the two courses, you save even more. And there's more coursework on the way as well. Like I said, links in the description. Supports the channel, supports yourself in that journey towards financial freedom. And if you come and join us, we can all support each other. Thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. I'll see you next video.